Good afternoon, everyone, and welcome to the Daily Volatility Box report for November 6, 2019. We are TOSindicators.com, home of the Volatility Box. For today's trading, we had a few different trades set up for us in the 30-year bonds. So we had two trades set up there, one of which was a winner, one of which was a loser, for a total P&L of $156.25. We also had a trade in the crude oil futures, which we'll call a winner, but really didn't hit either our target or our stop. And so we took it off into the close for 20 cents profit apiece for a total gain of positive $400. If you don't mind the afternoon risk, then you're still in this trade making your way to your target. So for us, we had a total of 3 trades today, positive win rate of 66% with 2 out of those 3 being winners, and a total P&L of $556.25. Now we'll talk about sort of a different approach that you might have taken for those of you that are looking to be a bit more aggressive. And we'll layer on Keats' new dynamic RSI indicator and specifically a colored candle version of it that we're testing out to show you how you may have maybe justified 2 more entries on the S&P and the Dow futures using this indicator as sort of your last filter, and then the volatility box to help you find edges where you can try to fade price action against. And so had you used the 2 of those in combination, and this is just a super aggressive note and would very clearly break one of our trading rules, which is to switch on over to the conservative volatility box after a news event, then that China news volatility today gave you an opportunity to fade the edge in the S&P and the Dow for some really nice gains in both of these contracts. Now, of course, let's acknowledge the fact that both of these are hypothetical trades, but we'll take a look at the price action to see what we can learn from this. And for our existing Volatility Box members, if you'd like the beta version of that new dynamic RSI code that we're testing out, then go ahead and send us a note, and we're happy to send you that same link if you are looking to be a little bit more aggressive on some of these entries, or even try and use it on things like copper or gold. Tomorrow on the calendar, we really have one event that calls for our attention, and that's a 30-year bond auction for those of you that like to trade the bonds. And if we open this up, this folder, to get more information, the thing to watch out for on this 30-year bond auction has been the trend of that first number, which represents the highest interest rate for the bonds that were auctioned off. Right? And so if we take a look at the actual numbers starting June 2019, we can see that this number has, for the most part, been decreasing as we get closer from June until October. So really, as we're getting more recent, that first number is starting to decrease, which represents the highest interest rate of the bonds that were sold. And you can learn a little bit more about this, but for the purpose of this video, the thing that we'd like to pay attention to is this event is happening again, and the last time it happened was October 10th. So let's go ahead and start by taking a look to see what happened on to the bonds on October 10th when this came out. And the time that this came out on October 10th, if we wanted to take a look, and that was 9:01 Pacific. And so we'll take a look to see what happened on the charts at 9:01 Pacific. So here I have a chart of the 30-year bonds plotted, and the colored candles are Keats RSI candles that we're testing out. And this is just something that we're starting to test out to try and find trend reversals or have more confidence in the more aggressive volatility box trades. But if we take a look at the bonds, on October 10th, if we had started with that first morning test, and this would have been our sign to switch on over to the conservative volatility box. And for the most part, that would have been a smart move that day, right? So this time we broke outside of the volatility box. This time we didn't really get to our entry, and we would have already been on the conservative volatility box. And so our rules protected us there. And we said that the actual bond auction came out at 9 a.m. Pacific, which is really right here. And we see something sort of interesting, right? Its price was falling, falling, falling. Auction came out, price started to halt, price started to chop, then it started to increase and slam into our aggressive volatility box lines. And at this point, typically here, we would be on the conservative volatility box, and we see something interesting. And this is something that I think all of our volatility box subscribers have seen is sometimes we're on the conservative models, and we'll talk about an example on the S&P and the Dow today about this, but it's really the aggressive models that hold the price action, right? And so using sort of this observation, we can see that the last time the bond action happened, price then slammed right back into the volatility box lines, this time the aggressive volatility box, before giving us that same sort of follow through. And we see that the bond auctions helped give us that volatility, and that next fade, although the rest of the day required us to be on the conservative volatility box, was really best suited on the aggressive volatility box. And so for those of you that are bond traders, this is just something to look out for. And if you'd like, you may also want to go back and study some previous bond auctions, and that would really start to help you understand if this happens more often than not. All right, now let's take a look at today's trades. So we'll start once again with the bond futures, and we'll start with that morning test. And so here, if we draw our volatility box entry line, we check to see whether or not we've reached either side's aggressive volatility box lines. We very clearly hadn't, and we were just chopping around sideways for the most part. And then came the sell-off right around 8:45. And at this point, the sell-off came way too quickly in the bonds that already triggered our entry that was parked. But we did have a chance to react in the S&P and the Dow, which unfortunately was almost a hasty reaction. But we followed our rules, which is perfectly fine. But in the case of the bonds, we actually got filled. And at that point, our volatility box entry line was actually plotting somewhere closer to down here. And we had our entry almost perfectly to a T. And our first target was 7 ticks, which was hit instantly in that same candle. Second target was 12 ticks. And as soon as we sort of saw this huge spike, and we had our sign to switch on over to the conservative volatility box using Forex Factory, we repeated that same action in the bonds after we hit both our T1 and T2. And that then triggered us into our second trade on the bonds, which is an opportunity to go short. This price slammed into our conservative volatility box. And unfortunately, the second trade was our stop out. And so as price then continued to drift a little bit higher, we were stopped out right here for 7 ticks apiece. And so our first trade gave us a +7 and a +12. And our second trade gave us 2 -7s. And that's how we ended the day still positive in the bonds despite being stopped out on both contracts in this second trade. Next, we'll take a look at the trade in the crude oil futures. And in yesterday's video, we talked about how to use the early morning volatility to help you figure out which volatility box to use for the inventory support. And starting 4 a.m., we saw that the aggressive volatility box was for the most part containing price action. But then we had our first breach right here. And this happened at the very edge of the hour when our orders are canceled. And so this is free information, and this ended up being some really nice free information for us today. We saw that price didn't really give us a follow through, but instead continued to drift down lower, which was then our sign to switch on over to our conservative volatility box, which helped keep us out of trouble right here. And that was where our trade plan really just helped us trade this to perfection. And using then the conservative volatility box, we had our opportunity to go long as price slammed into our volatility box lines. And since then, price has basically tried to drift higher, and we can take a look. It's really just chopped sideways to higher as price is trying to make its way to what would have been our target. We took it off into the close, and this is where we got right around that 20 cents a piece. Now let's take a look at that trade in the S&P and the Dow, and this is with the aggressive volatility box. And so we have our aggressive volatility box plotted here. The news came out at 45. And we can see then price started to drift down lower. Now the 5-minute chart here doesn't really give you too much information, but if you are looking to aggressively scalp something like this when say a news event comes out, then let's move on down to a 1-minute chart to just get the information that we care about. And with this RSI indicator on, we're just going to zoom in to after the actual news came out, which was this candle right here. Represented by this spike. And we can see that price then slammed into our volatility box lines. And we see this almost like a traffic light, right? We see red, red, red as price is slamming down into our volatility box lines. And then we see our first 1-minute candle go orange, giving a signal that the selling pressure is starting to halt. Then we get our entry at the entry line as we have the selling pressure starting to halt. And then we have this reversal, and this first green candle could then help serve as your confirmation candle, almost giving you the confidence in the trade, knowing what kind of follow through you might expect. And if we zoom out, we take a look that ended up being the almost picture perfect reversal point for today in the S&P futures that gave you a really nice entry. Same thing in the Dow. We see here price once again starts to fall into our aggressive volatility box lines. Here we see our first orange candle, and then we actually go to another red candle before then once again switching to another orange candle, letting us know that we're now starting to see selling pressure starting to halt. And then this orange candle gives us our opportunities for entry. And then it's almost like an up, up, and away kind of action where once we get that green candle, that's where price then really starts to drift on higher. And that then gave you almost that picture perfect entry once again for the rest of the day if you were looking to be a bit more aggressive. And we'll use these same colored candles to talk about the entry that came for us in our stock volatility box, and that was in PRGO. And so we had quite a few symbols that populated today. The ones that fit sort of the rules that we're looking at, which is it happens after 7 a.m., before 10 a.m., was PRGO. All right, and now for our stock picks, we'll start by taking a look at PRGO, which had earnings today. And because it had earnings, when we went to our website, volatilitybox.com, to run the models for this ticker, we used our conservative models, right? And we had PRGO hit our scan right around here. And right then we had our opportunity to run these models and have these very concrete levels ready to go, ready to day trade. Our entry came as price slammed into our volatility box almost perfectly to a T. And if we use the same sort of dynamic RSI candles, we see once again red to orange to green, and we hit our target right away. And so once you hit that T1, it's really up to you how you want to manage the rest of the trade, right? Do you want to trail your stop up? Would you like to move your stop to break even? Would you like to take off all of your position really at this T1 line? Because we're really just looking to fade the edges on something that's moving on volatility, which in this case happens to be triggered by earnings. So hopefully tonight's video starts to give you an idea of maybe if you're looking to be a bit more aggressive, how you can start to use the aggressive volatility box and that dynamic RSI candles to start to try and trade a little bit more often. Now, of course, this will reduce the probabilities of your trade, but you will have more entries. And we're starting to see that some of these entries give you some really nice reversal points, like in the case of the S&P and the Dow. And so that's a personal decision if that fits your trading style and risk parameters. But for those of you that like to trade more often and you don't mind scalping, or at least consider yourself an advanced scalper, then these sorts of techniques and that dynamic RSI indicator might be useful to you. So once again, if you're an existing Volatility Box member and you'd like to test out those colored candles on your charts, go ahead and send us an email and we'll send you the link where you can go ahead and download this indicator. Thanks for watching tonight's video. We appreciate it, and we'll see you in tomorrow's nightly update.